Hey guys, Tony here. Good morning. Also, it's kind of scary. I'm telling you guys, the bond play that I told you guys about, I bought back like June 25th. I bought here around this dip right here. I bought around 142. We are at 148. What happened for the month? It broke relative highs right here on June 18th. The TLT broke relative highs, and if you guys seen the chart that I had up for TLT, I'm expecting this to go back to around 170 or so. I mean, I'm already up 27%, around 820 bucks. I have 8 contracts of TLT, but this is basically that play that I told you guys that I'm not necessarily long bonds, but I'm short the yield, and it seems like I'm telling you that the U.S. 10-year and the bonds have that correlating inverse chart, which I think is definitely going to be. It might be playing out, right? I don't know yet. This is 142 to 148 is only about a 6-point move, but that 6-point move is a lot for bonds. This move right here is not a small move. Bonds don't tend to move that quickly, but they have been over the last, I don't know, like the last year or so, and it just keeps rallying to the upside, and it keeps breaking new highs. At least for the relative, the last 3 months, it is breaking new relative highs, right? So relative high 139, well, 140 again, relative high 142, relative high 145, and now relative high 148. So the bonds keep going up higher, which is the play that I'm doing, which I'm actually shorting the US 10-year because I think yields are going to be going down, and this is all in kind of correlation, which with bonds going up and possibly the yields going to negatives. I don't know if that's actually going to happen because that would be really bad for the economy, but so far that's what the chart's showing me. So again, these are the plays right here. I'm holding these up for like a year or so. I don't know if they're actually going to hit or not, but currently we are up about 27%. So just kind of letting you guys know, if bonds do go back to pandemic highs back in, here August 2020, well, not August, but more like somewhere like February right here, somewhere like, we're already at pandemic highs. We're already at pandemic highs. We just need if this goes back to 170, there might be a lot of fear that starts going into the market, because this, bonds being higher relatively means a weaker stock market. And this is just kind of my opinion, looking at historical patterns that have played out through the bonds and through the yields. And this is I mean, I'm fine because I'm making money, but it's also not okay because this means that there's definitely some weakening going on in the stock market and other similar markets. So we'll see what happens. I'll see you guys later.